So what we do so unique in the industry is we took this manual process of building evidence and we built a methodology and a technology that allows us to automate the entire process of building the evidence, but tailor the response for each and every chargeback as though a human is handling it without any human error.
3, 2, 1, yeah!
Welcome to Let's Talk Payments, the podcast series where we interview industry experts from the payment industry. My name is David from eFlow. We help merchants finding high-risk merchant accounts. And today, it's a pleasure to introduce Roenen Ben-Ami, Chief Risk Officer and founder from Just.ai. Roenen, can you tell me a little bit about Just? What is Just doing? When has it been founded? Tell me a bit about your travel so far.
Yeah, for sure. First of all, thanks for having me on the show today.
You're welcome.
So Just is a chargeback mitigation solution at the post-transaction stage. So once a chargeback actually comes in, and many of those chargebacks are friendly fraud or first-party misuse, that's when Just comes in and deals with those chargebacks on behalf of merchants. We build the evidence on their behalf in order to recover those funds when those chargebacks are actually an innocent mistake by the cardholder. They forgot what they purchased, or actual criminal activity where a cardholder may be trying to get something for free. So what we do so unique in the industry is we took this manual process of building evidence and we've built a methodology and a technology that allows us to automate the entire process of building the evidence, but tailor the response for each and every chargeback as though a human is handling it without any human error. And we do this based off of a system that we call dynamic arguments. So when the data comes in from the chargeback, from the multiple sources that we use, the system decides which arguments to use, how to design those arguments so that the response gets the best tailored response for each specific chargeback and can handle all the cases at scale.
I'm dealing a lot with merchants avoiding chargebacks, which is obviously important as well. But you are basically helping merchants once there is a chargeback to fight them.
Correct.
And not to accept them.
Correct.
When did Just start?
So we started in early 2020. So we've been around for a little over 5 years now. Started with myself and my partner, Ophir Tahor, who's the CEO. We decided together to build something different in the market.
How did you come to that idea?
Yeah.
I'm sure you've been in payments before.
Yeah. So I came from payments myself. I worked at a company called Simplex that was acquired by Nuvei. They were the first payment processor to deal with fiat to crypto transactions where you can purchase crypto with your credit card. The toughest fraudsters sit in that space because crypto is in some way anonymous. It's also liquid. It's that form of cash, and it's instant. So fraudsters invested a lot in trying to get fraudulent transactions through. I spent a lot of time building the anti-fraud solution there and then moved over to the payment side. Something I always say to new employees at Just is keep asking questions until you ask a question that we didn't ask ourselves. I saw that there were gaps in our knowledge and our processes around being a payment processor, and I built out for them their merchant screening and monitoring teams, fraud and chargeback monitoring teams, risk and compliance. And that's where I discovered the world of chargebacks. And I saw that there wasn't a solution on the market that could solve my pain point at scale, but also tailor each and every response. I built a manual methodology there, and then we had a larger vision. Once I met Ophir, we said we can take this to the next level using technology to actually tailor the responses. And using machine learning, you can actually run tests behind the scenes and improve your results over time. So it's not just about hitting that 50 or 60% win rate. It's how do you get to 70 and 80 by finding your weak spots and improving those.
How does manual methodology look like?
So manual processes, you see it with many merchants today when they handle their chargebacks. They usually have a team of individuals that are pulling the chargeback data from their payment processors, looking what data they have in their systems, and then they're manually either working off of a template that they've created and plugging the information into the template or designing a specific evidence response. And once they've built the evidence, then they send it back to the payment processor and wait for the result of the case. Doing that, you definitely have what I saw when I had built a team doing that was that I could have a great team doing a great job, and then volumes go through the roof, and I can't get to all the cases. Or you leave the small dollar value cases on the table. Or you usually have a weaker link on the team, so you have human error happening, and the right evidence is not being submitted for the right case, or the wrong arguments are being put into the actual template. And that caused challenges that didn't allow us to get the win rate that we actually wanted or what merchants want when they're working in a manual way.
You mentioned the wrong arguments. For those who don't know, how would you select what are the right arguments to hopefully win a chargeback representment?
Yeah, it's great because, there's so many different reason codes. Each card scheme has their own reason codes. And then within each card scheme, you have different reason codes for, let's say, the two biggest groups are those fraud-related chargebacks and the non-fraud related chargebacks. And when you're dealing with a fraud-related chargeback, you have to prove that it's either the true cardholder or somebody connected to the true cardholder that made the transaction. So the arguments you need in that scenario are very specific to that scenario, as opposed to a non-fraud related chargeback, for example, if the item wasn't received. Now, proof of delivery is very important there, proof of the receipt, while the description of the item, those things are more important than proving that it was actually the true cardholder that made the transaction.
Can you explain something about that whole process? You mentioned that you give arguments to win a chargeback. Who's deciding on that? How is that process organized?
Yeah, that's a great question because I always say that someone who doesn't come from the payment space, when you dive in, you see that payments is a lot more complex than you thought. There's so many different entities involved, and then in the chargeback space within payments, those entities are all involved in the process. So when a cardholder goes to their issuer and says, "I'm disputing this transaction," it's the issuer's responsibility to post the actual chargeback within, let's say, the card schemes networks, Visa or MasterCard. MasterCards, you have VRoll or Mastercom systems. Once it goes through VRoll or Mastercom, then it gets to the acquiring bank. If there's a PSP, after that, it could pass to the PSP or the acquiring bank straight to the actual merchant. And then the merchant receives the chargeback, and the funds are automatically pulled from the merchant when the chargeback happens. I always say chargebacks are, in a way, it's built where you're guilty until proven innocent as a merchant because you automatically lose the money. If you don't do anything about it, you've lost the funds. And now you have a very short time window to respond as a merchant to try and recover those funds. And when you build your evidence, you submit it back to your PSP or acquirer. That goes back through the Visa or MasterCard and then ultimately to the issuer. And the issuer is the initial decision maker in the chargeback process. They review what the cardholder has submitted to them. They review what the merchant has now submitted. The evidence has been created, and they make that initial decision on the case. If it continues, it can go all the way to the card schemes at the arbitration stage to make a final ruling, but most cases usually end between the merchant and the issuer making the ultimate decision.
And I can imagine that arbitration ruling would be pretty costly.
Exactly. Arbitration in itself is a challenging stage to go to. We do have merchants that go to arbitration with us, and we have very high success rates at arbitration. But that's because we deal with arbitration on the cases that it's worth fighting and worth going to that stage.
Yeah.
But yes, if you lose at the arbitration stage, you can get a fee that can be between $500 and $600 as well. So it can be costly, and you usually have to waiver as a merchant if it's even worth the time and effort to do that stage.
So I'm a typical merchant selling electronics like laptops, iPhones, whatnot. What would you advise me to initially think of just to prevent becoming in a trouble situation?
Yeah, I think it's a good point. It's the prevention is very important in the chargeback process as well. It's not just fighting your cases. What we always say to our merchants is we're aligned with you. If you are receiving chargebacks that are legitimate chargebacks, and we can see that by analyzing your chargeback data, that's step one. Let's decrease the legitimate chargebacks because our solution wasn't built for legitimate chargebacks. We're going to recover the illegitimate chargebacks, those friendly fraud, first-party misuse cases. So the first stage is to make sure your end-user flow, your checkout process is compliant based off of the card scheme rules. Your terms and conditions are very clear on what it is that you're providing, and the terms. If you're a subscription, the terms of the subscription, as well as how to cancel or receive a return or a refund. As a merchant, if you provide good customer support and you provide easy ways for customers to deal with the issues that they have, many times they won't even go to their issuer and go the chargeback route. So you can decrease chargebacks in the first place. In addition, it's always good to have a strong anti-fraud solution in place that could stop true fraud. Those are the main things to even prevent the chargebacks from happening. But even with all of those pieces, if you're still passing the limits of the card schemes, then of course there's solutions like Verify and Ethica that can help you stay below the limits, like RDR, CDRN, ethical alerts that we also provide to our customers when we see that even with everything that's being done to prevent, they're still hitting the limits. Then they can use those as well to stay below the limits. And then it's really handling the chargebacks that are still coming in, that are friendly fraud, first-party misuse. You're below the limits. Now let's try to recover the funds, because with the alert systems, you're usually doing a refund, and you don't want to refund a case if you deserve to recover those funds. So the best case is to actually fight and win as much as you can, and only if you're hitting the limits or have passed the limits, use the alert systems to make sure you're within the Visa or MasterCard limits. Especially now Visa has the new VAMP program. Make sure that you stay below the limits based off of the new ratios that they've put out there.
So if I would have customers claiming they did not receive their ordered laptop, or the package supposed to include the iPhone was empty, how do I make sure that I can fight those type of chargebacks?
Yeah, so it depends on the actual reason code. So let's say it's not as described. So that type of scenario would be a not as described scenario.
Yeah.
A lot of times it's that the iPhone is not new, or it's used, or there's something broken with it. The best thing is if you can get that customer to come to you without having it even go to a chargeback, right? And actually deal with customer support and help that customer get what they need. Now, if they're still going through the not as described route, that's why it's so important that your end user flow and your terms and conditions are up to par on what you can provide to strengthen your evidence. So it will help decrease the chargeback for coming in the first place. For example, there are websites that they're selling used items, and the description explains that it's a used item, and there might be scratches on the item. That description is so important in your evidence when you're actually providing the evidence to the issuer. So the description, pictures of the actual item, your terms and conditions about the quality of the item, and make sure the customer understands what they're purchasing. And then when the chargeback comes in with that issue, then you can pull that information out and actually say why this is an illegitimate chargeback, because it was all provided to the customer beforehand. In addition, if there is an issue, the cardholder could have come to the merchant as they were supposed to before going to their issuer, and we could have dealt with the issue if there is still an issue on top of that, because the chargeback process was built as a last resort. The issuers, the card schemes, what they want to happen is that the cardholder will go to their merchant and deal with issues with their merchant. Only after they've exhausted that route are they supposed to actually go to their issuer and dispute the transaction in that way.
So would you say that especially in certain markets, consumers might misuse the chargeback process?
Yes, we
Because
definitely.
it's not used as the last step, but actually as the initial step.
Yes, and it's very interesting to see since COVID what's happened because we've seen an increase in the misuse of chargebacks, especially in Europe, since COVID. Before COVID, the numbers of chargebacks that were happening was a lot higher in the U.S.
Mhm.
Compared to Europe, and we're seeing the numbers increasing more and more since COVID. It's become more and more mainstream in Europe as well because it was a way during COVID, especially in the travel industry, for consumers to get their funds back from their merchants during travel cancellations during that time, and then it became more mainstream because it's easy.
Yeah.
It's a lot easier sometimes to just go on your credit card statement online, and many of them just have a dispute button next to each transaction, and just click the button.
Yeah.
Yeah.
Yeah. You mentioned COVID. Would another example be that deliveries would be much more distance-based, no signature anymore, um, contactless deliveries, hence much less proof that the product was actually delivered?
Yeah, that's a good point because that was an important piece of evidence is getting the signature when there was a proof of delivery, and that's the thing is today it's more efficient that you don't actually need to sign in some scenarios. Some scenarios you still do, but with that, then you have to understand what is the evidence that is still available in that scenario to show proof of delivery. So, for example, for proof of delivery, we're integrated with all the carriers. So when a chargeback comes in that says item not received, then we receive the tracking number usually from the merchant. From the merchant, and then we take that tracking number and run it through the carriers to see the life cycle of that package. Where was that package and when, and did it arrive in the time frame that it was supposed to arrive to the actual address? And that's really important now for the proof of delivery as opposed to signature used to be the main proof of delivery. Or we work with many food delivery companies, and their delivery, they have their own carriers, right? They have their own delivery mechanisms. So showing that the item was actually delivered to the location, and there's a picture of the item at the actual location that it received that it was supposed to be, and you can even have the coordinates of the item at that location is very important to show the proof of delivery.
Yeah. I have a great relationship with my neighbors because they unwillingly function as my parcel office when I'm not at home. What I see often in the track and trace is that according to the delivery company, it was actually delivered at my house, but I know it was delivered at my neighbor's. What if I would file a chargeback because I would not have had this relationship with my neighbors and I would not have received the actual package? And the merchant would obviously say, yeah, it's delivered at your house, but I really did not get it. So you mentioned the back and forth between an issuer and the acquirer. And what if I would keep insisting as a customer that I did not get it? In the end, you mentioned before that would go into arbitration, meaning that Visa and MasterCard would rule, right? Is there anything you can say in terms of likelihood that the merchant would win or that I would win?
Yeah, it's a great point because in the end, we're working off of data
Yeah.
in order to prove the information in the scenario. But in the end, there's a cardholder that is still claiming after all the data that they still didn't get the item, and nobody's going to go give the cardholder a lie detector test to see if they're lying or if it's actually truthful what they're saying. In that scenario, as I mentioned, most cases are not going to go to arbitration. It's usually up to the issuer to decide if the information the cardholder is giving them is the right information, or if the merchant's data and evidence is stronger. If it goes to arbitration, then it's up to Visa MasterCard to look at the evidence. I always say that with the way the card schemes work is very based off of very specific rules. They look at each stage of the process. Was the chargeback submitted properly by the issuer? If it wasn't submitted properly by the issuer, they don't even look at the representment evidence. They look at at that stage. And if it wasn't submitted properly, there's many things the issuers need to do in order to be compliant. They'll already decide in the other person's favor. Many arbitration cases are just one off of technical a technical item in the process. If that was done properly, the submission of the chargeback, then they look at the merchant and the merchant's evidence. Was everything done properly in the time frames and everything was done properly there? Then they look at the pre-arbitration stage. Was everything done by the issuer at the pre-arbitration stage? And then ultimately then they'll get to the arbitration stage and looking everything together. But many times they've told us they don't even get to the analysis of the arbitration stage because there's something that happened along the way. And they look at it very black and white at each stage when they're making that decision, because that's all they have to work off of is the documentation that they have and the rules that they've built, how that documentation needs to look and what it needs to have inside of it.
Yeah, I've been 15 years in payments. I'm not a chargeback specialist, but I have always learned the customer is always right. But hearing this, a customer might also lose, even when Visa and MasterCard would have to rule.
Yes, but it has to be a very strong case at arbitration. That's why we say that we have very high win rates at arbitration, but we only go when we know we have a very strong case to win that specific case. There's specific reason codes, to be honest, that we don't even push them to arbitration because we know those specific reason codes. It doesn't matter how strong our evidence is. The card schemes, if it goes to arbitration, is going to rule in favor of the card holder. So
would these be more fraud-related reason codes?
Yeah,
because it's much harder to prove that it's actually friendly fraud.
Yeah,
instead of real fraud.
Exactly, and that's what's so great about the new rules of the card schemes, where they have, for example, first-party trust, which gives the ability to actually have a scenario where you have a fraud case, but it has it's sitting in a specific scenario where you have past transactions that are specifically good transactions from the same cardholder with the same IP address, same data points, that you can prove that it is the true cardholder. And that opened up the window for merchants that even if it's a fraud reason code chargeback, you can continue pushing it forward and win those cases. But if it doesn't fall under that scenario, and there's very specific criteria that you need in order to fall under that scenario, then yeah, many of the fraud cases, if the issuer doesn't see that it's ruled in your favor, many times it's not worth continuing those cases. Your chances are very low to win those cases.
Yeah. You described the process of a chargeback representment between an issuer and an acquirer.
Mm-hmm.
What is your role versus the acquirer's role? Because if I understand correctly, it's ultimately the acquirer submitting all records to the issuer. It's probably also the acquirer to be aware of all rules and the processes and to meet all KPIs and requirements.
Yeah, it's a great point, and also depends on the acquirer. So the acquirer and PSP send the information over to the merchant, and we're also integrated, so we get that same information around the chargeback. It is the merchant's responsibility or just responsibility to actually build the evidence, the document that we build on their behalf to prove that it's an illegitimate chargeback. We submit that package back to the PSP and acquirer. Now, the acquirer, some of them just submit everything through the system, and others have their own review system themselves. That's why I always say you don't only need to pass the issuer's review system, you have to many times pass the acquirer's review stage as well. And they'll actually pick and choose which cases that the merchant built or we built for them should be submitted to the issuer in the first place. And that's why the evidence needs to be so strong. You want to first pass the first screening, the acquirer's screening, then the acquirer submits the evidence to the Visa system, and then it gets to the issuer, and the issuer reviews the evidence.
And that needs to happen super fast, right?
Mm-hmm. Exactly. So you have a short time window. Usually acquirers cut down on the amount of time that you have because they need time on their end to submit. It depends on your PSP or acquirer, but you can usually 10 to 15 days, depending on how much time they give you. But with Visa's new rules, now you usually want to submit before the 10-day time period, because you can have additional fees if you don't submit within the first 10 days. And then it's up to the acquirer to submit to VRAW.
So technically, you are obviously integrated with the acquirer or the gateway to get the information. On your end, and we will get back to that, you have automated a lot of things. But am I right that it can happen that you automatically file or submit a file to the acquirer, and the acquirer would still manually go through if you met all their or the industry requirements?
So again, it depends on the PSPR acquirer, right? We are integrated and have pulled the chargeback data automatically from the PSPR acquirer. We build everything automatically on our side and run automated QA as well as sampling QA, but everything is run automatically through our system, and we submit it back through. Now, some PSPs have an automated process of submitting it right through to VROL or Mastercom. Others have a manual process of submitting it through, and others do a screening and then submit it through manual. And usually their screening is a manual screening.
Yeah.
Mm-hmm.
What I have, I obviously have known you for a while, or your name. What I have always thought about how you have set this up, and that's very simplified probably, is a chargeback for a fraud reason. You automatically check whether there is sufficient logs, tracked parameters or whatever to prove that it was actually the cardholder, that there is sufficient authentication. And when there is a non-delivery related chargeback, you simply check what is available based on your integrations with delivery companies and so on. I probably simplify a lot. So can you share a bit more how your automated system prepares the best representative file?
Yeah, it's great because let's take the fraud example. In the fraud example, what you're really trying to prove that it's either the true cardholder or somebody connected to the true cardholder that made the transaction. That means it's an illegitimate fraud chargeback. So we have three main data sources we use to build our evidence. We have what we call the PSP or acquirer data that we pull automatically from the PSP or acquirer. No lift from the merchant's end to do any of that. We pull that automatically from our end.
Yeah.
We have our third-party enrichment sources, and that is also done automatically by us. No lift from the merchant's end. Our third-party enrichment sources for a fraud case would be things like we take data points that we have like phone, IP, email, billing address, and then we get more information about those data points. When was the email opened? Who was the name behind the email? Is at that billing address, are there multiple names under the billing address? Maybe it's a family member that made the transaction and not the cardholder, so they know each other. That's an illegitimate fraud chargeback. What's the distance between the IP and the phone, the IP and the billing address? And you can connect those data points together that make it highly unlikely that it's actually true fraud. Was there verifications done on the phone or the email before, and they're in the vicinity of the billing address and the IP are in a close proximity? All these things, these data points together, help you tell a true good story as to why this isn't actually true fraud. The last data source we use is the merchant data. We have many merchants today that are live with us, and they don't provide us with any merchant data. That means they go live with zero lift from their end. We just use the PSP and third-party enrichment sources and already providing them a better win rate than they had before working with Just. But we take it a step further because we always say to them, this is where we're at today. We're at 40% win rate, but we can bring you to 50 or 60 if you could provide us with data point A, B, and C from your system. And that's the only lift that a merchant would need to do in order to increase the win rate. And we allow them to provide us with that data in multiple ways. They can provide us with an uploaded CSV file on a weekly basis. So somebody just downloads the CSV file from our portal, adds the data from their system for those chargebacks that we need the additional data. We show them the data that we need. They add it in, and then they upload it back into our system. Or a lot of merchants will just integrate with our API. We have a very easy to use API. Once they're integrated with our API, then we get that data automatically into our system. Once those three data sources are in our system, that's when it runs through our dynamic argument process. The system looks at the data we have from those three sources, decides what arguments should be used, in what order they should be used, how they should be designed, and it's taking into account who is the PSP or acquirer, who is the card scheme, who is the issuer that's reviewing it. Even though all the issuers are working based off of the card scheme rules, each issuer has their own processes, internal processes of what they're looking at. So how do you build the evidence that'll help that issuer decide in your favor as quickly as possible? Because they only have about 3 minutes to review the evidence. So you want them to help to make their lives easier. How does why are you in the right as the merchant? Help them decide that as quickly as possible. We kind of say it's like building a resume. Somebody who reviews a resume is probably not going to review the entire resume, but they need to know that you have the skills for the job. That's how we build our evidence.
So you put your Just logo on it.
No Just logo. It's the merchant logo. It's evidence for the merchant in the end. There's no need to add Just in the process of building the evidence. And then the system decides which arguments to use, how to design them, and then submits it. And once we start getting results back, that's when we start going through the optimization stage. Okay, we got a 40% win rate, but there are subcategories that were only at 5 or 10%. Could be a reason code, a specific issuer, and we find those subcategories that we're weaker at, and then we run A/B tests. Because we're not working off of templates and we're working off of dynamic arguments, what that allows us to do is we're not A/B testing two different templates. We're A/B testing a scenario where an argument is being used in a specific place in that scenario. And that could be for a specific merchant, could be across merchants, across industries. And that's where we get the network effect because we work with so many different merchants. So we'll run an A/B test on a weak spot that multiple merchants have, and then whatever the system learns in that A/B test will be implemented into the core of Just, and then all merchants who fall under that scenario receive the benefits of what the system has learned.
Does that also mean that you might take more risks with certain issuers? In terms of you have experienced that a certain issuer is more likely to accept a weaker argument compared to other issuers?
What do you mean by a weaker argument?
Let's say that an issuer is not convinced by your first representment package and basically threatens, if that's the right word, to go into arbitration. If I'm not mistaken, you might correct me, is that in the end the issuer would decide if you really go into arbitration. So in the end it would be up to the merchant to accept the loss or basically tell the issuer, let's go ahead, let's go for it. Do you believe that certain issuers are more likely to, in the end, accept the loss of the chargeback compared to other issuers? And do you make use of that? Or is that simply a wrong assumption on my side?
So in the end, when you go to arbitration, it's that the issuer has pushed past the initial representment stage, and then it goes to pre-arbitration. When a case goes to pre-arbitration, if your PSP or acquirer allows you to continue pushing forward, then you as a merchant, yes, can decide if you want to go to arbitration or not. What issuers actually push to pre-arbitration, it's more of what arguments are relevant for for that scenario, and for a specific issuer, what's more important for them to see. Let's take a fraud chargeback, for example. There are issuers that I would say seeing past transaction history is more important for them than seeing CVV and AVS match. AVS match more in the US. And so then you want to put your strongest arguments higher up in the document, because that individual, that issuer, only has 3 minutes to review it. And you want them to see those arguments that are going to help them make their decision in your favor faster. So you decide which arguments to put in which location based off of the issuers.
What type of conversations do you have more with your prospects? Would that be merchants not representing at all, and you would need to convince them to start representing, obviously, through you? Or would it be merchants already representing, but doing it in-house? And you would need to convince them to use your services.
Yeah, it's a great question because I always split up the types of potential customers of Just into three different categories. I think the majority sit in the second category, but I'll explain the categories first. The first category is what you mentioned, that a merchant that doesn't handle any other chargebacks today. And it's a no-brainer. If you're not handling your chargebacks today, just let us take over those chargebacks and see what we can recover for you. It's going to put money in your pocket that you didn't have before.
Yeah.
The second group is merchants that are handling their chargebacks, but either their win rate is low, their volumes are getting high, and they can't get to all the cases with their manual internal processes. And then they realize that they need something else in place, and looking for a technology-based solution is very relevant, especially when they can't get to all the cases. It's more scalable. And then the final group are those merchants that actually are handling their chargebacks well today. They're getting to all their cases. They've built usually either some type of automation internally or combined with a manual team that's handling the cases, and their win rate is a decent win rate. And in that scenario, then it's looking at, what is their operational cost today, and if they're at a 40% win rate, let's say, can we get them to 50 or 60? And then we do an analysis for them and see if from similar chargebacks that we've handled with a similar industry, have we gotten higher win rates? And then we usually will run an A/B test. They'll give us, let's say, 50% of their traffic, and they'll compare it either to their internal solution that they're running, or many of them are working with an external third-party provider, and then we'll run an A/B test with that external provider and show that we can provide a higher win rate.
Yeah. Those conversations can become sensitive as well, I guess, because you already mentioned operational costs. It basically means that people are not needed anymore.
Yeah, it's a great question because there are teams that chargebacks are part of what they're doing in their work. And when we're able to come in and help them with that, then they're able to focus on other areas of the business, and it's a huge benefit for them. But there are other teams that actually, that is all they do is chargebacks. And that could be a sensitive scenario. And you have to make sure you're speaking to the individuals at the company, that they're looking at the cost benefit and the numbers, and does it make sense to outsource this to a technology and have this a technology third-party provider, or keep it in-house with the actual manual team, and what are the pros and cons of having the internal manual team?
Yeah. When looking at the bigger companies, how do they usually organize the collaboration between their fraud teams and their chargeback teams?
Yeah, I love that point. I was just with one of our larger enterprise companies in the U.S. I was at the MAG conference last year. We talked exactly on this topic. I was on stage with their anti-fraud team, internal anti-fraud team, and their chargeback team. And the whole conversation was about the collaboration that was needed, the internal collaboration between the teams, so that the anti-fraud team is trying to stop the true fraud from happening in the first place, so you have less chargebacks coming in. And the chargeback team, who's building the evidence, can see trends on the chargebacks, and they're feeding information back to the fraud team. Or the fraud team knows that they missed something and there's going to be more chargebacks that are coming through, and they have to update the chargeback team what's going to be happening. Or their customer support, maybe their customer support team is seeing something, or they need to update their customer support team that you're probably going to be seeing something because of something they gone through. And the collaboration between those three teams are so important in order to deal with the volumes, to prevent future attacks. And we're also a part of that with our merchants. We always say we're not just the black box dealing with your chargebacks. We provide you with insights back of what's happening with your chargebacks. So if we see, for example, a fraud ring from the fraud chargebacks, you have a lot of true fraud cases and they're connected, then A, you're not going to win those chargebacks because it's true fraud. But B, maybe there's a rule that needs to be improved in your system to actually stop these types of fraud rings from happening in the future. So we'd like to provide insights back to our merchants to be a part of that collaboration, so that we can prevent the true chargebacks from happening in the future.
Is there specific industries where you've seen recently um, a, a, a higher willingness to actually represent chargebacks?
Willingness, I'd say the most of the industries we work in, there's a willingness to handle chargebacks because chargebacks are worth fighting and recovering. If you're working as a compliant merchant with the right MCC code and you have nothing to hide as a merchant, it's your right as a merchant to recover those funds. So I wouldn't say there's a specific industry. I mean, we're working across travel, physical goods, digital goods, subscription, crypto, gaming, gambling, and many others that are receiving these chargebacks. And it's a financial pain, but it's also there's an emotional connection to it too as a merchant because you work so hard as a merchant to market your merchandise or your services, to produce them, and you sell them, and you're providing good customer support and everything, and still the chargebacks come in, and it's quite frustrating as a merchant. And when you lose a chargeback, it's not just losing your margin on that transaction; you're losing the entire amount. So think about how many additional transactions need to go through your system when you lose
Make up for that.
to make up for it. Exactly.
So those conversations can also be difficult when you would need to advise merchants to not represent in certain cases or to not proceed.
Yeah, but not representing cases, especially now in today's space, because there's been a lot of rule changes recently, is it's all about ROI, right? Like, what are your chances of winning this case, and are there any additional fees that you're going to get if you submit, win, or lose that chargeback? And then you can help make that decision for that merchant. Does it even make sense to submit a specific case or not? And it's all about looking at the numbers and the ROI on the specific case.
So if I'm a merchant selling products for 10 bucks and I have some chargeback issues, should I represent them or not?
So with a solution like Just, especially if you're we have several business models, but if you're in the success-based model, meaning you only are charged if we recover the funds on your behalf, it usually makes sense. We have merchants that have $5 transactions and lower to fight those cases. But what we always say to merchants is make sure you understand the fees that come along with your chargebacks from your PSP, and then we can put that into our model to help decide when not to fight the case.
Yeah. You mentioned before that there were recently lots of rule changes. Can you elaborate a bit on those?
Yeah, so for example, VAMP is the new monitoring system, but Visa at the same time of rolling out with VAMP, they also changed the fees that they charge the acquirers. So for example, if you submit a case after the first 10 days, there's additional fees that can be charged to the acquirer. And if you don't accept a case or accept it later on in the process, you can also be charged additional fees as an acquirer. And many of those acquirers are taking those fees and passing them down to their merchants. So we always say for the merchants, they should check with their PSPs and acquirers, are these fees being passed down to them? And then because we work in an automated way, we can handle a case within seconds. So for those merchants that need faster response times, we can do that within seconds for them so they stay within the limits. As well as accepting cases. We can automatically accept cases so merchants don't need to manually go in and accept the chargeback just so they don't get those additional fines if they don't accept. It could be up to $7 a case today if you just don't accept the chargeback based off of Visa's new rules.
What has been the weirdest chargeback reason from a consumer you've seen?
Yeah. So it's not a chargeback reason, right? Because there's very standardized reason codes based off of the card scheme rules. But what I'd say, I think it was a year and a half, 2 years ago, we got a chargeback that was worth around $416,000 for one chargeback.
Wow.
And to get one chargeback like that, you want to win that case. It's a very painful chargeback to receive as a merchant.
Yeah.
We won the case, which was exciting, but to receive one case worth that much tells you how much it's important to fight the cases worth fighting to recover those funds.
Yeah. Wow. Would you even argue that that transaction should not have happened with a credit card?
The specific industry that it was in, that's their line of business. So they have many cases like that. But when you receive a chargeback worth that much, it's painful.
Yeah.
Yeah.
When do I know as a merchant that I'm doing well? What are my, what should be my expectations win rate wise?
Yeah. So win rate is the key factor. Looking what is your win rate today? What was your win rate before working with Just? What is your win rate after working with Just? How much of an uplift there is, as well as what we mentioned of should you even fight specific cases? What is the ROI on if there is additional fees or not as a merchant now. Win rates vary, and that's what's very important for us as Just to always educate the market is a lot of merchants will say to us, what win rate will you get?
Mhm.
And we're not a company that just throws out selling random win rates. Our goal is to hit a higher win rate than what you have today. And win rates are based off of your industry, your end user flow, the places in the world that you're selling your merchandise or your services. The reason codes that you're getting, there's different win rates for different reason codes. And that's why we do an ROI analysis. And we can take the past 12 months of chargeback history that a merchant has and say, okay, this is your win rate today. When we compare this from similar chargebacks in similar industries that we've handled, we will at least get this much of an uplift for you. And that's the minimum uplift that we'll get. Our goal is to get even higher.
Yeah.
But so that they can see that there's an ROI if they work with us, that it's worth their time and their investment to work with a company like Just.
Yeah. Should I consider Just as a company with mainly developers? Or are there also people really looking at cases and semi-manually handling those cases?
Right. So it's a great question because I always say that the magic of Just is domain expertise combined with technology. And our domain experts today sit on our product team. So there's very close collaboration between the two teams. Now, the whole process of running the solution, building the evidence, and submitting the evidence, fully automated technology, smart technology that gives a tailored response per case. That being said, there is automated QA happening on that, making sure that the system is running properly and the system alerts us if there's an issue. So then a developer can go in and see what the issue is, or a developer will see an issue and then can pass it all over to a domain expert, as well as we do sampling. We do sampling, we pull sampling out, and then our manual team will do percentage sampling to make sure everything is running properly. The domain experts, what they're doing at their core part of the business is to make sure before a customer goes live that everything is working properly and they have all the right arguments and the system has built and designed the right arguments for that specific merchant. But also they're on top of the testing. They decide what A/B tests are we going to run next. Where is the weak spot within the system, and we need to actually run a test on that weak spot. They're staying up to date with industry changes. Visa and MasterCard, for example, they change their rules twice a year. They come out with new chargebacks rules, and there are nuanced changes. And those nuanced changes change our arguments and how we build and submit our evidence. But they also make major changes to card schemes every few years. So let's take subscription. Visa in 2020 and 2021 made changes around subscription and how subscription the end user flow needs to be. That was important for us to make sure our customers were compliant with those new end user flow rules so that less chargebacks would come in that are true chargebacks, that are legitimate complaints. And when there were illegitimate chargebacks coming in, we had stronger evidence because their end user flow was compliant. MasterCard did something similar in 2022. So they're staying up to date with these industry rule changes, and then they can input a core argument change. And that's what's so amazing about the scalable approach. When an argument is changed, it's changed for a specific scenario for all merchants. So it's not that, okay, a change has been made. Now we have to go into our hundreds of customers and manually change templates. It's the system can be changed and improved at scale across our portfolio of customers.
Yeah. Speaking of customers, are those solely merchants, or do you also have acquirers as customers?
Yeah. So in the end, the core customer is the merchant that's suffering from the chargebacks.
Yeah.
But we have partnered in the past few years with many of the top anti-fraud solutions, acquirers, and payment processors, so that they can provide our solution to their merchants, which has been very, very successful. And they many of them will white label our solution and provide the chargeback solution to their merchants.
Are there big differences between Visa and MasterCard? How they handle chargebacks? How issuers handle chargebacks?
Yeah, so the card schemes have different rules, different reason codes, and you have to make sure the evidence that you build is based off of the specific card scheme that it's coming through. They do have things that are similar, and many times when one changes something, either within the year or two, you'll see a similar change with the other one. But what's challenging is that though they're making the rules, it's the issuer that's reviewing the evidence that the merchant builds or that Just builds on behalf of the merchant. And each issuer their processes are about 3 minutes to review the evidence, and they each have slightly nuanced processes that you need to understand and what are they looking for. Even though high level they're basing their processes off of the card scheme rules, not every one of the issuers are reviewing the evidence in the same way, and not every individual at the issuer is reviewing the evidence in the same way.
Yeah, in the end, you're not tweaking after a rule change. You're continuously tweaking because each and every issuer might have changed their procedures internally.
Exactly. What I always say today is just as a technology that we've built to optimize the ability for the manual reviewer to make a better decision in the merchant's favor. But the future vision of Just is actually to go even a step further, because we're optimizing something that is a manual reviewer. But why do you even need a manual reviewer? In the end, the whole system should be optimized and scaled in the future, and it should be systems working together and making decisions instead of manual decision making. Issuers have hundreds of individuals reviewing this evidence today. Each issuer, even the card schemes, when it goes to arbitrations, they have hundreds of individuals reviewing the evidence.
So your next target will be issuers.
We have already started on the issuer side. Yes.
That's interesting. And are they open to this?
Yes, we have several successful POCs on the issuing side.
So then you would basically change the whole way of a chargeback process and how that's operating.
Yes, there's a lot to be done in the entire ecosystem for chargebacks. It's a future vision. Today, our core solution sits on the merchant side, but the future vision is to look at the entire ecosystem and see how we solve the bigger pain point of manual processes that can already be solved through technology.
That's a great vision. You mentioned you have a background in crypto. Is that your favorite industry still?
It's a good question. Crypto chargebacks are very unique. I was on a podcast a few months ago, which is solely speaking about crypto chargebacks. We could speak for 3 hours just about that topic. So they're a very interesting type. The customers are very unique in that space. Your proof of evidence is very unique in that space. The confusion of consumers in that space, because a lot of individuals, it's their first time purchasing crypto and they don't understand what they're purchasing. So there's a lot of uniqueness in that space that I really enjoy. But every industry today, because we're just expanded to so many industries, has its quirks in it, which is what's so cool about our technology, because it's not every time we go into a new industry, we have to build everything from scratch. We learn about that new industry, and then we add the additional arguments for that relevant industry that then will tailor the responses for that new industry. So we can quickly add new industries. There's even areas of the world that doesn't make sense to build your evidence in English. and we have evidence in different languages
Yeah.
to solve that problem as well.
Yeah. And you mentioned the example of a customer not understanding the crypto industry, but that same might also apply for the issuer reviewer.
Exactly. That's a great point.
So you're basically hand-holding the issuer reviewer, explaining that the crypto was actually delivered, as an example.
Right. Think about that individual at the issuer that's reviewing the evidence. They're probably reviewing 60 cases, 70 cases a day. Who knows how many cases they're reviewing? And they're reviewing a case from crypto, a case from physical goods, digital goods, subscription. Like when they get to crypto, A, does that person even know what crypto is? And B, do they know what proof of delivery looks like for crypto? Proof of delivery in crypto looks very different than a physical goods proof of delivery. So the evidence that you build, it's in the beginning, it's so important to explain what is the MCC code? What is the item that was purchased? What was the good or service that was provided? And was it provided properly? And this is why it was provided properly.
Yeah. Have you seen, since the introduction of PSD2, basically mandating European merchants to authenticate their customers above a certain transaction value, have you seen a shift in chargeback reason codes?
Yeah, great question. Yes, definitely. So there's more 3DS being used today because of PSD2, but we're not seeing less chargebacks. We're just seeing more non-fraud chargebacks. So you don't see as many fraud chargebacks because there's a liability shift when using 3DS, but there's just more chargebacks coming in with other reason codes. So we haven't seen a decrease in chargebacks with many of our merchants that have moved over to using more 3DS. We're just different reason codes.
Yeah. An easy conclusion would be that issuers use the wrong code. Is that the right conclusion?
You said that. I didn't say that.
But you can always edit it. Is there any other regulation, you mentioned already VAMP, is there any other type of regulation recently being introduced or we might expect to see in future you see relevant in this context?
Yeah, so I think MasterCard is probably going to do something similar in regards to VAMP. We're waiting to see what they do. It usually happens several months or a year or two after a Visa makes such a major change like that, but they'll probably want to see what it looks like, how VAMP rolls out properly, and then see what they do. I also think there's going to be additional changes made on the fraud side. What the card schemes are looking at is how they can build concrete rules, black and white rules, to prove that a case is not true fraud. Like we mentioned, first party trust, it's a great rule. There's just not a lot of cases that fall under that scenario. So a lot of merchants today, we support first party trust arguments, but a lot of merchants, they have to provide us with the data. Do they want to invest in providing us with that additional data? How many cases do they have that fall under the first party trust rules? So I think it's a good step for the card schemes. I think they're going to make additional moves in the coming years to try and make more concrete rules like that. So these fraud cases that should be won in the merchant's favor will be won in the future, more of them.
Yeah, great. How would I select as a merchant a good partner like Just? What should I think of as important factors when I am considering to outsource my whole chargeback management?
Yeah, it's important to look at, first of all, I always call it the black box scenario. As a merchant, you don't want a black box solution, especially if you were handling it internally before in-house. You have teams that are touching the fraud and chargebacks internally. You need a partner in the process, not somebody who's just handling it and not providing you with any insights, not showing you the evidence that they're building. It's important to get feedback, provide feedback as a merchant. We always say it's a partnership. We're building the evidence, we're submitting the evidence, but this is what your evidence looks like. Do you have feedback for us that we can, as a partnership, even take it to the next level? I always say the merchant knows their business the best. We know the rules around chargebacks the best. Now, together, that partnership can be incredible if they say, oh, I have this other information. You're asking for data point A, B, and C. What about this that's behind the scenes that you can't see in the end user flow? And many times that's what brings even stronger evidence to the table, or the insights we bring back to them about how they can improve decreasing those legitimate chargebacks in the first place. So insights, improvements, not just getting a standard win rate, like hitting 30%, great. How do you get to 40, 50, and 60? We're always trying to incentivize our merchants to provide us with additional merchant data so they can bring them to the next level and improve the win rate even more. In addition, you want a scalable solution. There's many solutions today that are manually handling chargebacks. Um, Dealing with chargebacks in a manual way doesn't matter how good that team is. When volumes increase, that team's going to have a hard time getting to all the cases.
Yeah.
I know when I used to have a manual team, when volumes increased, we would shorten the template we were working off of so that we could get to all the cases. The win rate would go down, but at least we submitted something.
Yeah.
It's better than a 0% win rate. You want something that's more scalable that could handle if you have 1 month thousands of chargebacks and the next month hundreds of thousands and it's fluctuating. It shouldn't affect the quality of evidence that's being submitted on your behalf. And you want something that's tailored. So you can have automation, simple automation of just injecting data into a template, but are you really tailoring the case for that specific scenario, the reason code, the card scheme, the issuer, the PSP, the data available for that scenario that will give you the highest chance of winning the case?
We cannot have a podcast without AI as a buzzword. What is Just doing with AI, or what will you do in future?
Yeah, it's a great question because everything that I've been explaining to you here is AI and machine learning,
Yeah.
but I just don't use the word AI and machine learning because it's such a buzzword today. It's more explaining what it actually does. That's what's more important for merchants to understand. And in order to tailor each and every response to a chargeback and to actually run these tests behind the scenes at scale and to get that network effects that improves win rates across our portfolio of customers, that is the technology doing that that's allowed us to make such waves in the industry in the past few years. That being said, AI in the past just year, several months, it continues to improve. And what we're doing with AI today, I always knew was going to be part of Just. I just didn't know we were going to be doing it so fast. And that's what's so exciting is if you are on the cutting edge of technology today and you know how to use it right, you can really do things today that was not possible before. What we're doing with LLMs today, by actually analyzing customer support communication and deciding what customer support communication should be put in the evidence and what shouldn't be put in the evidence, it's an incredible place to get to in our evidence creation process. And you don't need a human doing that. You can actually use the system and test it.
So basically, you could argue that Just would by far not be as effective as today without AI.
Oh, of course.
No.
My partner and I always say it's not only about having a great idea and building that great idea, it's about building it at the right time when technology is at the right place where you can build it. And well, when we had the vision of Just, when my partner has a strong tech background, it was important for us to look that technology was actually there and available to do what our vision was around chargebacks.
Yeah. Over the last couple of years, the focus from regulatory authorities on consumer protection significantly increased. Does that make your job or the merchant's job more difficult?
It's a great question. I think it really, we're seeing it now more on the issuer side when we're working on the POCs on the issuer side, is that the regulatory piece really sits with the issuers because they're the ones facing the customer when the when they want to submit a complaint.
Yeah.
And they have to make sure they're staying compliant with the new rules. Once the chargeback is posted, then it works based off of the card scheme rules. And then we live off of the card scheme rules once the chargeback is entered Visa or MasterCard's ecosystem.
Yeah. Are you happy with chargebacks even existing? How about an ecosystem without chargebacks?
Yeah, it's a great question because chargebacks were built back in the 70s to increase consumer confidence to use their cards, right? In the end, and it succeeded. Today, everybody uses their credit card without thinking and having another thought about it. It's incredible what cards have has done in the past several decades. That being said, I think chargebacks, in one sense, is a good thing, and it's good for consumers to have the ability, if they were wronged, to be able to recover their funds. And there are many legitimate chargebacks in the ecosystem. The problem is that the system is being taken advantage of.
Yeah.
It could be an innocent mistake. I always say that you purchase so many things online, you go traveling and make purchases, and then a consumer goes at the end of the month, looks at their credit card statement, and they don't understand what the descriptor is on their statement, and they forget what they purchased. And a lot of the chargeback claims are innocent mistakes, but there's also a lot of criminal activity trying to get something for free. So, yes, I think the chargeback process is great, that it protects consumers, but it also has a gateway for consumers to take advantage of the system or to make mistakes. And that's why it's also so important for merchants to be able to defend themselves and build evidence against those cases that may have been wrongly submitted.
Yeah. I genuinely learned a lot today. Thank you very much, Runen, for being with us. Thank you for listening and watching to us. If you have any question or you like to suggest any other topic, feel free to reach out on eflow.com. And thank you for listening and watching. Until next time.